Thank you for joining us and welcome to Business Incorporated. I'm Chimezi Obi Iwago. On the program today, Egypt's inflation rate hits 4-year low, upping chance of rate cuts. MSCI adds MTN Nigeria to its Frontiers Market Index. Plus, Sierra Leone reviews mining licenses in industry-wide cleanup. Let's get the show started with the markets. And for the first time since this week, the NSE index showed green at intraday, trading marginally high at 0.05%. Egypt continues to top the region with almost 2% gain at intraday today. The JSE index in South Africa was also up 0.90%. However, Kenya closed in the red on Wednesday. And in the Middle East, market sentiment was mixed at intraday. Dubai and Saudi Arabia were the winners at the time, trading 0.24% and 0.74% high each. Abu Dhabi and Qatar, on the other hand, faltered, trading lower. And in Europe, stocks traded higher in the morning as investors swing back towards risk assets and digest a range of corporate earnings. Investors are also monitoring the yuan after China's central bank set the official reference rate for the Chinese currency at 7.0039 yuan per dollar on Thursday. Well, let's talk to Ulrich. Hello, Ulrich. Good afternoon.
Hi, good afternoon to you.
Now, China is definitely feeling the pressure from the U.S. on trade, but numbers today showed also some surprise on the positive side. Tell us more.
Yes, exports in China perked up. Globally, the Chinese exported 3.3% more compared to July of last year, and that goes for global demand, and that's completely different than the forecast. The forecast had been by Bloomberg, for example, that the exports globally would go down by 1%. This, of course, before the backdrop of the trade tensions, the weakening global economy, and that indeed has weakened the Chinese picture for the first half of the year, where everything has gone down, but now better exports. Imports, on the other hand, they went down in the month of July by 5.6%, but consider that's also a lot less drop than had been forecast. So good news all around. It also served to prop up the yuan just a little bit. And both of these factors together are a good factor for the markets. Here in Europe, the markets are going up. Not everywhere. The FTSE is going up only marginally, but the CAC 40 is going up more than 1% in France, and here also in Germany. A lot of shares benefiting. The DAX also up.
And U.S. President Trump is putting pressure on trade because he believes that importers are enjoying unfair advantages. But many companies are active right in the United States, like Deutsche Telekom. Its T-Mobile US is a valuable part of the German telecommunications giant. Group results today showing how much U.S. contributes, right?
Right. It's contributing about half, almost half of the telecom group's profit. 1.8 million customers gained by T-Mobile in the second quarter. So the growth is advancing there and expects to grow even further until next year. It will have 5G, it says, the first network to do so in the United States. And of course, the much, much, much bigger plan on the horizon is the merger with Sprint. It's well on its way. They have the regulators' approval. There were some things that they had to give up on in order to get that. It's not finalized yet, though, because there are still some court cases pending in the United States by states who consider it would be an unfair advantage if Sprint and T-Mobile US, these two big companies, were to come together. It's important that the Deutsche Telekom have this very well-running unit in the United States, but Deutsche Telekom also posted better results in the first half of the year. The share, it's a bone of contention for everyone in Germany, at least. When you look at the share price today, it's around 14.50 euros. The IPO price was 14 euros and 57. That was back in 1996, in November of 1996. It briefly jumped up to 100 euros, helped fuel a kind of an internet communications hype, of course, around the world, that bubble burst. And ever since then, the Germans have been especially sensitive about the role the Deutsche Telekom has played in fueling these expectancies. And for many German, at least private investors, telecom is still a no-go.
Still on corporate news, yesterday buyers scored with sale of a chemical park operator, Currenta. Now reports claim the next big divestment is just up the road, this time in animal health.
Yes, that's right, and that could reap even more higher rewards for Bayer. The sale of Currenta, that yielded 3.5 billion euros or $3.9 billion. And now while the animal health deal, which would be with Elanco, another animal health group, is not ready yet. So far we have only insiders' information that this is going to happen. That would be worth much more. People figure it would be up to 8 billion euros. And of course, for money from both deals, it's good stuff that Bayer can use because the share price has dropped so dramatically in the course of the Monsanto takeover. And Bayer needs money, A, to prop up its pharmaceutical business. It just announced today the sale of, in contrast to these deals, smaller company. And of course, it also has to have reserves out there to show the investors we're ready because of those thousands of damage claim suits in connection with the weed killer Roundup from Monsanto, ex-Monsanto.
All right, thank you for your time and those updates, Orich. Enjoy the rest of the day.
Thank you.
And stocks in Asia mostly gained today as Chinese customs data showed a surprise jump in the country's July exports despite a protracted trade war with the United States. Mainland Chinese stocks gained on the day as the Shanghai Composite rose 0.93% to approximately 2,794 points, and the Shenzhen Composite added 1.011%. In Japan, the Nikkei 225 rose 0.37%. The Topix Index, on the other hand, bucked the overall trend and slipped fractionally to finish at 1,498 points. Over in South Korea, the Kospi ended its trading session higher by 0.57%. Meanwhile, Australia's S&P ASX 200 gained 0.75%. And in the U.S., stock index futures were higher following a wild ride for Wall that saw the S&P 500 log its biggest intraday comeback of the year. At around 2:30 a.m. Eastern Time, Dow futures rose 121 points, indicating a positive open of more than 106 points. Futures on the S&P and Nasdaq were also higher. Tumbling yields can signal global growth concerns from investors and fuel sharp pullbacks in equity markets. Investors are also monitoring the Yuan after China's central bank set the official reference rate for the Chinese currency at 7.0039 yuan per dollar on Thursday, the weakest level since April 21, 2008. On the data front, there will be jobless claims at 8:30 a.m. Eastern Time and wholesale trade numbers due at 10 a.m. Eastern Time. In corporate news, Kraft Heinz and Viacom will be reporting before the bell. Uber, Dropbox, News Corp, and ASX Equitable will update investors after the bell. And away from the equities, we look at the likely impact of U.S.-China trade war on Nigeria, and that's on our commodities market update. Tobiloba Ogunbolu from Financial Derivatives Company joins us now. Good afternoon, Toby. Thank you for joining us.
Good afternoon, Chimeze. Thank you for having me.
Now, the trade war between the two biggest economies in the world, U.S., China, and China, is escalating. 21.3% of Nigeria's imports are from China, while approximately 8.4% is from the U.S. Is Nigeria immune from the impact of the escalating trade tensions between these two countries?
Okay, so no, Nigeria is not immune to the escalating U.S.-China trade war. So we know that U.S. and China are the two leading economies in the world. And the U.S.-China trade war would have an impact or a negative impact on commodity prices, will have a negative impact on almost all stocks too. So the impact of all this on U.S., on all countries and even African countries is that we'll see like a slowdown in demand for commodities, and this would affect all countries.
And Nigeria revenues growth and development is dependent to a large extent on the oil markets. What is the likely direct and indirect consequences of this global trade conflict on the oil markets and by implication, Nigeria?
Okay, so what usually follows a global trade war is a currency war. And we saw that like on Monday when China devalued its currency below 7 yuan per dollar. And the impact of this is that we'll see that commodities would, export will be favorable for China, and this will have a negative impact on a lot of commodities. We'll see that there will be reduced demand. So the impact of all this would also be felt on global commodities, like I said earlier. We've seen that global commodities have, the prices of global commodities have declined. For example, oil prices is currently below $60 per barrel, which is Nigeria's benchmark. So the impact of this on the Nigerian economy is that oil revenue would decline by about 5 to 10%. This would have a negative impact also on FAC disbursement, and definitely would have a negative impact on consumers' purchasing power, because their salary arrears won't be paid and all that. So this would definitely have an impact on the Nigerian economy, and on the other hand, it will have a negative impact on consumers too.
All right, talking about trade now, global trade has been growing at 2.6% to current level of about $39.34 trillion. The trade imbalance between China and the U.S. is at about $419 billion. So what is the likelihood that the imbalance will be breached by the current and new tariffs? How will the new tariffs affect Nigeria and of course, other African countries?
So the trade relation between U.S. and China is mostly skewed towards in favor of China. And we saw that a few days ago, President Trump imposed a 10% tariff on 300 billion worth of Chinese goods. And these goods are apparels, footwears, and also electronic appliances such as smartphones. And we know that the demand for this commodity is usually high in the U.S. So the impact of this is that export of these products into the U.S. would become more expensive. So the demand for the products would definitely fall. So this will have a negative impact on the American economy. But talking about China, we would see that they would look for other markets for its products. So for example, we might see increase in the imports of some of these commodities into African countries and also Nigeria. So we would expect the import of some Chinese products to be more in Nigeria and also some African countries.
All right. Thank you for those updates, Tobiloba. Thank you for your time. Tobiloba Gubelu is one of the research analysts with Financial Derivatives Company. In all the news, Morgan Stanley Capital International has included MTN Nigeria Communications in its Frontier Markets Index. The telecoms giant is the first company on the Nigeria Stock Exchange to be listed on the MSCI index. Morgan Stanley says there will be no additions to or removal from the MSCI Frontier Markets Small Cap Index. MTN Nigeria, which was listed on the local bourse last May, is the second most capitalized stock on the NSE with a current market capitalization of 2.611 trillion naira. The inclusion will be done on August 27, 2019. Meanwhile, the group raised 2.1 billion rand from asset sales in the first half of this year as part of a divestment plan to simplify its portfolio. And Airtel Africa says it plans to seek admission for its ordinary share capital to be officially listed on the premium board of the Nigerian Stock Exchange. The telecoms giant and the NSE's third most capitalized stock also announced plans to trade on main market of London Stock Exchange. According to its first post-listing earnings sent to the NSE, the company's pre-tax profit stands at $3.074 million, while net profit is put at $2.49 million. At the same time, the company reported operating loss of $669,259 million, while its corporate tax in the UK stands at $584,180.